I was able to take my account all the way from $5,000 to $100,000 in 6 months. And then I went back and I took it from $15,000 to close to $45,000 in just 3 months. And today I'm going to show you the step-on-step on how you can replicate the same formula. So right before we continue, let's start with our results and everything that happened on the back end. So all the way from January 1st to February 25th, I was able to accumulate a total of 28%, close to 30%, in just 2 months. And mind you, the S&P 500, how traditional people invest into the S&P 500, they usually get anywhere from 8% to 12% every 12 months. That's 365 days. I'm outpacing the S&P 500 by 3, 4, 5 laps. And mind you, this is only 2 months. Last year, I was able to accumulate 80% on my portfolio. These are some screenshots from my transcripts and my statements. If you guys want to take a look at that, let's go into my past 128 trades that I have taken. Every singular winner, which are going to be the green ones, they're like at least 2 to 3 bigger than the red ones. It's because I take my risk management extremely serious. And also that means that every dollar that I have put into a trade, I was able to 2 to 3, sometimes even 5x it. First of all, I do not day trade. I do not do Forex. I do not do crypto. I do not, none of that. What I typically operate is going to be swing trading. What does that mean? That means that I buy a stock and I don't sell it till like a day or two, sometimes 3, 4, 5 days. But it doesn't really matter because at the end of the day, we're going to be able to make money. Step number 1 is going to be that you're going to have to open a broker account. Why is this important? So you can buy, sell, manage your portfolio, and most importantly, look at charts. Now, all of these brokers right here, I have used that in the past. We got Charles Schwab, Fidelity, Weibo, and of course, Robinhood. One thing that I can tell you is that if you're going to go with Robinhood, I will highly suggest you to switch to any of these 3 after a month or 2. Step number 2 is going to be identifying a trend. But right before you can identify a trend, which is self-explanatory, you're going to identify whether the stock's going to be going up or down. We're going to identify our stocks. How we're going to be able to do that? I have my own screener that I typically run it every singular morning at the same time, at 8 a.m. Central Time, that I'm going to give it to you guys in this call as well. But once we find our stocks, we're going to target stocks that have made a huge move up to the upside. So that means the stocks that pretty much are coming down and all of that, you just want to put it to the side, throw it to the trash. Now, once we have identified our stocks, we're going to move over to step number 3, which is going to be identify a structure, a break of that structure, and ultimately wait for a pullback, and then we can place our trade. As you guys can see right here, this is pretty much our structure. And once we break that level, 9 times out of 10, we're pretty much gonna go and keep on flying. In this case, with this stock, I made like roughly around $3,000, and I'm gonna show it to you guys. Now, step number 4 is gonna be just to set up your stop loss and just print. Easy as that. As you guys can see right here, every time we set our stop loss is only 0.5% of our total account, meaning that if your account is worth $10,000, only 0.5% of that is going to be your risk, meaning that your risk is a minuscule to the amount of money that you're going to be able to make. That is risk to reward. So typically the stocks that we target, they usually run anywhere from a 3 to a 15 risk to reward. As you guys can see, this trade right here was roughly around a 15 to 1 risk to reward, meaning that every dollar that you were able to put in, you were able to make at least $15 back. Now, I know that this sounds extremely easy and so simplified, but the thing about trading is that a lot of guys and a bunch of gurus are going to try to overcomplicate it. They're going to tell you to add this amount of grabs or this amount of indicators, because at the end of the day, they don't want you to learn. Now, let's go and hop into the charts, and I'll show you one of the best trades that I had within the last 12 months. So this trade right here is RGTI. Now, when it comes to this trade, once again, I play the same requirements on every single trade. What's going to be the first requirement, as I oversimplified, is going to be that we want to make sure that we find a stock that has made a huge move up to the upside. And of course, first of all, we're going to be swing trading on the daily time frame, meaning that every singular candlestick right here represents 1 day. So once we have found our stock that has made a huge move up to the upside, the second thing is going to be that we're going to be adding our SMAs, simple moving averages. We're not going to be adding this for us to have a signal to the upside or to the downside. We're going to be adding this just so we can gauge the market. Is the market bullish or is the market bearish? Whenever you guys see all of the simple moving averages stacked up all on top of each other in numerical order, that means strong buying pressure and bullish momentum, meaning that we have buyers, institutions, bankers, and all of the above, just dumping money into this trade. Now let's recap. First things first, we want to make sure that the stock has made a huge move out to the upside. Second thing, simple moving averages are going to be stacked up all on top of each other. The 10 on top of the 21 on top of the 50, and the 50 on top of the 200. Third thing, once we have made a huge move out to the upside, we want to make sure that we consolidate. So typically, whenever we go up or whenever we go down, we don't automatically go up like this in a straight line. We're going to be going up in a staircase scenario, such as like this. We go up, we come back down. We go up, we come back down, and we want to take advantage of this. How are we going to be taking advantage of this? Is that once we come back down and we touch the 10 simple moving average, at that point is going to be our signal for us to go in. But just because we touch the 10 doesn't mean that we're going to go in. We're going to wait for a last confirmation, which is going to be volume. What does volume represent? Volume is going to represent, as I already mentioned, buyers, institutions, bankers, investors just dumping their money into this stock. How can you possibly know when we're going to have a strong amount of volume? Well, lucky for you, the volume is going to be down in the bottom right here on any particular broker that you're going to be opening up. When we found a spike of volume, it was this day, as you guys can see right here. Let me make it a little bit bigger. And of course, we were also breaking our structure right here of $18.18. And at the same time that we had a lot of volume coming in, as you guys can see, we broke a resistance line. And what typically happens when we break a resistance line, we're just gonna bounce at the same level that we broke it before. And if we had a lot of volume, that means that we would never come back down under it. Now in this trade, the way that me and my team will play it out is going to be the following. And this is exactly how you're going to execute it as well. Once we break a particular level on the daily time frame, you're going to go and place your stop loss all the way at the low of the day. And then that's going to be your risk. We always want to position ourselves at 0.5% of risk. And the rest of it is just going to be pure profits. In this case, our profits were the same thing. It was roughly around a 15-to-1 risk to reward. It's the same thing, nothing changes. Now, I've been playing the same strategy for the past 2 years, and I'm telling you, it works like nothing else. Now, let's go and jump into my screener, the screener that I've been using for the past 2 years as well, and that it has helped me out generate a shit ton of cash. Now, these are going to be the following requirements on the screener itself. Now, the first filter that you want to add is going to be that we want to make sure that a stock is going to make at least a move from 5% and higher, because you do not want to be stocked up in a stock that's moving extremely slow. At that point, there's no reason why we should be trading it. Last thing, we're going to go into the market cap. I usually trade my market cap all the way from $2 billion to $10 billion. And sometimes when I cannot find anything, I usually go from $2 billion to $500 billion. And when it comes to the price, I typically want to aim anything above $5 and above. Once you're done with this, you're gonna have a list of stocks right here, and all you simply have to do is just go one after the other until you find something that you like, and just be patient until they actually formulate and they come back to the 10 and then bounce, such as this one. As you guys can see, ticker symbol RNG. We made a huge move to the upside, consolidated, volume dropped, we came back down to the 10, volume was decent, and then after that it blew up. I hope this helps. If you guys have any type of questions, please leave it in the comments down below.